So well, keeping up with the energy, ladies and gentlemen, here we go. As I already said, the topic is very interesting and I'm definitely going to take all the notes backstage. Building a fintech in India through cycles of uncertainty. To moderate this session, please join me in welcoming Ms. Chandra R. Srikanth, Deputy Executive Editor, Moneycontrol speakers. A huge round of applause, please. And our speaker for this session, please join me in welcoming Mr. Sabyasachi Goswami, CEO, Perfios Software Solution Private Limited. A huge round of applause. Energy, everybody. Let's keep it up. Come on. Thank you. Thank you so much.
Good afternoon, everyone. It's great to be here at the Global Fintech Fest. I think, Sabya, you're a veteran of the event. It's my first time here, and the energy is quite amazing. And let me also take this opportunity to congratulate you among the very few unicorns this year, and I think India's first ever B2B SaaS unicorn. How has life changed for you?
Not much though.
Not much though. Okay. So we're going to be talking about building a fintech in India through cycles of uncertainty. And Sabya, if I look at where Perfios or when it started, right? 2008, when people didn't even talk about fintech. And in a sense, it was the year of the perfect storm. I think Bear Stearns fell, Lehman Brothers fell, AIG was looking for a bailout. We were a few months away from the Satyam scandal in India. And then you had Perfios trying to build something. And Perfios actually then had just one product, which is the personal finance product. So from there to now, how was it then and how have things changed?
Quite a bit. We used to get thrown out by our clients that time versus being accepted today. Just because that time probably people were trying to figure out the survival, at least the FS community. Because of three things, as you said rightly, the global crisis. So they were trying to figure out a product which can help them build their solutions which has really lower NPAs, because that is the reason of the crisis. The second bit was while they were doing that, they were also looking to control their credit cost. And on top of it, doing all this, they were trying to also give a different customer experience, which they were trying to struggle at that point in time, figuring out how they can. And probably we were there at the right time, at the right point, trying to solve those problems in a very different way, which was not amenable in the first couple of years because it's a complete change management. We're talking something very different, which the banks and institutions at that point in time has not seen or experienced. Having said that, I think there were also progressive guys who were willing to take a chance and bet, and which is what we got an opportunity, and I think thereafter no looking back. And that's where it has changed. There are multiple challenges that we have gone through, starting from facilitating, creating awareness in the industry that when you are trying to change something, it is not first the end consumer experience that will change first. It's your insider who has to start thinking very differently, which is the people itself within the organization, which happened over years. The second bit, that while there is an interest on compliance, governance, regulations, all of that, here you are talking of innovations before all of that. So again, while we all know FS is a space which is highly regulated, we are talking innovations which probably sees a little ahead in time. And how do you balance that, both of them, that is compliance governance versus innovations, and which took a time to overcome that challenge and explain it to the larger audience in the FS that this is how we do things. The third is that while all this was happening, how do you go and implement at the end, because people have not heard of APIs that time, or the systems are ready to consume APIs those times. So it was broadly, if you put it into perspective, there were three changes that we were seeing and even the client side was seeing. First is people, which is people to deal with the change management and mindset. The second was technology. That means how do you create system which can consume the APIs in the way that they should. And third is the compliance and governance, because all these three is bound to change when you're bringing innovation. So we had to deal with this over years.
Right. I don't know how many of you know this, but Perfios actually stands for Personal Finance One Stop, because you started out with personal finance management software then, and now you have over 75 products and servicing 18 countries. So it really made in India SaaS for the world.
Yep.
But give us a sense of the scale. You work with leading banks, financial institutions. How many data points, for instance, do you give them every year? How many transactions pass through your software? What kind of AUM is involved? Give us a sense of the scale where you are today from being thrown out by banks in 2008.
So, that was on a lighter note. When I said thrown out means the conversation was more, you're a bunch of technocrats, do you understand financial space?
Right.
And we had to prove our worth. Today, that is not the question, but that time there was, definitely. It is a lot easier today for the incumbents now because the stage is set. People understand. So that time it was very different in 2008. While answering the point that you were making, from a scale perspective, we work with about 1,000 plus clients in 18 plus geographies. Banks, NBFCs, fintechs. Insurance, HR tech, commerce, payment gateways. So cover the entire ambit. From a scale perspective, 3.5 billion transactions a year, more than that.
3.5
billion. A little over that even. We also see an AUM, and AUM is a figure that keeps changing. But last I remember about 10,000 odd crores on the SME side and roughly about 30 odd thousand on the consumer side. So that's the AUM that we see. From a total people perspective, we are about 1,700 odd people in the organizations. And I think we power the critical journeys for most of the banks. There's a myth that we do only one product. Absolutely not. We cover the end-to-end life cycle of the bank's journey. Yes, we started with one, which was more on the PFM, which is personal finance management. It is back on track. It was lost in between, but I think Account Aggregator brought back the PFM on track because we were ahead of time. In fact, we had to discontinue that because customers are never willing to pay on a consumer side, right? But I think it found its space now. And apart from PFM, we do the entire, when I say starting from on the lending journey, we do from sourcing to due diligence to underwriting to support till collections on the lending side. If it's on the liabilities side of the business, we do pretty much, again, sourcing, onboarding, and support post the accounts are open. So that's the length and breadth of what we do.
Right. Since we are talking about cycles of uncertainty, from your vantage, what are the biggest sources of uncertainty for you? Does it come from regulation? Does it come from compliance? Does it come from global macro events which could perhaps dictate, the appetite for your offerings?
Actually, all of them. Not in order of priority. I think the first being, if you are an international company or you have an aspiration to become international, which we are, overnight we got into a challenge of Bangladesh we never anticipated. So that's how geopolitical plays. Okay. I don't know if Iran creates a problem in some of the geographies that we are present. We are present in Egypt, the currency has an issue. We are present in Africa, there was political unrest because of the government being selected. So we have different kind of macro geopolitical situations which poses a challenge if you are a truly international brand, which we feel we are. The second being within the country or outside, if you're present in different geographies, you are dealing with different regulators and compliance issues. So that means you have to be on top of it. Now, I feel most of the fintechs, and without naming anyone, compliance leverage is not a business model.
Okay, that's a nice way of putting it, compliance leverage.
So the point is, as far as you understand, either it is today or tomorrow or day after, there will be regulations. So while you design a product, you need to bake in. Not everything you can anticipate and think, but at least you should initiate that process in the design, that it has to be flexible enough to incorporate those when it comes. Otherwise, you will have to face it by the day.
Right. How do you handle these geopolitical risks? For example, you mentioned Bangladesh. One day you wake up and, the PM is out of the country.
Difficult. There is no right answer because we have youngsters working in different geographies. So first thing is the safety and security of our employees. And nothing to do with age, but they are young. They have not seen enough of the world probably. So the first thing is we take help of the partners who are there and the banks, because they are topmost banks of those countries. So they definitely step forward to help us to see whether the situation will normalize quickly and they can stay put, or we move them to the hub and spoke location. So whatever is the closest safe location. From a client perspective, we keep interacting and seeing how they are looking at the things. I think these are top two things. I mean, nothing specific that we need to. We have not been ever faced with such a situation where we have to kind of completely move people out. That has not been the scenario so far.
Right. Sabya, you are also a company that, you're present in 18 geographies. Majority of them are Middle East, South Asia, North Africa.
Yeah.
You have ambitions to enter North America.
Right.
Tell us a little about that, because traditionally SaaS firms actually go in the opposite direction, right? They begin with North America because it's the largest technology market in the world, very good in terms of selling, cross-selling, making money. You decided to go in the opposite direction.
So it was not by choice, but by design, first of all, because we are a Indian-formed company and we thought we can make a difference to the nation and take the nation global. So our products are all made in such a way which are more industry agnostic, geography agnostic. So we have been able to expand to the adjacent industries very easily, and we are also being able to expand it to the other geographies. So coming back to North America or Europe, wherever you can think of, why we haven't gone the other way? The reason is because we felt India is such a huge market which teaches you two things: scale and robustness. You go to any part of the world, it cannot teach you how to handle scale and robustness. It has taught us. Now I go to any market, at least one question is not asked: do you know how to handle scale? They will not even ask, because I work with the largest bank of the country. I handle so much of scale. So what is the question of scale? Not possible. Robustness. I handle so much of governance and compliance in this country. I face more than 260 audits a year. Tell me, which country would have given me that exposure where I would have faced audits of 260 plus audits in a year done by the big fours and the largest of the banks in the country? Not possible. So I got that exposure. Now it is quite easy if I go abroad and try to expand and say, this is the scale that I handle, this is the kind of compliance that I handle. So I think that was by choice, by design, we made that call. And of course, I think one of the things that we take pride in saying, we never chase valuations. A lot of people start in that place or that zone because they feel they will get a lot of value apart from good research. Tech guys, I don't disagree to that fact, but I think they also look at valuations, which we felt always that it is about creating more sustainable value and product rather than chasing valuation. If it would have been reverse, I would have gone that road and said, let's start there. We haven't.
In your previous question, since you mentioned, that fintechs need to be mindful of designing their product in such a way that there's no compliance leverage. How much of your time goes into this? What would your advice be to aspiring founders in the hall in terms of how they should approach their business today, especially suppose they are in a similar space where they are building software to power financial institutions?
So over a decade now, I think it is not about just my time, but our organization's time, effort, money, with respect to compliance and governance has gone up by 10x. That includes my time as well. The reason is, it is not because suddenly our country has awakened to compliance. It is because we are so deeply engaged into technology and it is changing so fast, you need to be on top of it. And if you have to be on top of it, you need to continuously anticipate what the changes that is possible. Like I always say, the hottest topic, and I'm surprised that we have still not asked, probably you'll ask later, AI.
I was going to come to
So I feel AI is something that is the talk of the town today, and somewhere blockchain is sulking. But the point is, there are technologies that will come, and we have to be on top of it. That means you have to invest sufficiently on the compliance side. I mean, look at the new rules that the policymakers are making, which is for the interest of the general citizen and public, but how does
the personal data protection.
the personal data protection bill, and the rules will be out soon, and then there will be 60 days of consulting, all of that. But practically, when it has to be implemented and supported by the organizations like us, what is the net worth requirement that is there? So I literally feel that a lot of effort has to come together as an industry body and solve all of this. And I see, regulators and policymakers are working on the right direction, but I think what remains to be added finally is that how do we take compliance to the next level? And that means a lot of time has to be spent, not only just by me, but by the entire team. But that's not the only thing that I do. I represent our country to different nations to change the perception from a support-led tech nation to a tech product and tech-enabled nation. That means there are a lot of representation that happens to different geographies, which includes US, by the way. We thought that till the time I started meeting the US congressmen, I was always of the opinion that US is far ahead in terms of product technology, because you said that Silicon Valley has created wonderful products. Of course, they did iPhone, which I use, but many such financial products, they are still behind. I wouldn't want to, if I ask in this room, how many people would like to transfer money by paying $5? The answer would be absolutely no, right? But if I do a wire transfer to US, I pay $5. So are we saying they're there? The answer is no. So that means there's a lot of work that has to happen, and that means insignificant amount of time that will go on compliance side. That's one. But so as I said, industry is one thing that I work a lot to, promote the Indian product companies outside India. That's a lot of work that I do, and I try to spend there. Of course, with policymakers to see how the fintech ecosystem can grow. Right. Because I have a passion about fintech, that how does it exist in the time that will come forward, which is going to be a lot more challenging.
Right. Now we come to the hottest topic, which you said we haven't addressed yet. And I think no conversation is complete these days without asking about artificial intelligence. You are already using AI for many of the processes that you have. Tell us about that. Is there actually a cost saving, productivity saving? Because we always get mixed views that, enterprise adoption, is it really serving a purpose? Tell us about your experience.
So I feel any new technology, the first reason it is called an emerging technology because it is emerging. Right? The second is premature optimization. I'm a little worried about. We try to do a lot of optimization very premature stage. I don't think all use cases in AI is in a mature stage. So we need to take that with a little more care. Cut the noise, focus on truly what it can change. Third, while we have been using AI in different forms, and earlier it used to call ML and LLM, now you can Gen AI, AI4, that's fine, but a lot of use cases. It depends how you can prompt to get the right answer. So it needs to learn a lot more than what stage it is, at least in our experience. I can go on and on this subject, but we recently launched a brief report. I'm happy to share with anyone who wants to make that request. Please reach out to our website, make a request. I'll be happy to share that report. It contains what are the use cases that we tried, what are the challenges and success we saw, versus blindly accepting that AI is the end state and it can solve the world hunger. No, it will not. As I said in the beginning, it is a highly regulated space that we operate. And when we are talking of, are you talking of creating a content or a piece of code? Yes. How do you trust that that piece of code will not break other things that is running fine? So it needs to be trained a lot more. How do you know even without prompting the right question, it will throw out the right answers? In our experience, it didn't a lot of times because it is serious stuff, right? So I think those are learnings that we have tried. I mean, I can quote many examples, but again, in the interest of time, the report will speak a lot, which we just released a couple of weeks back.
Will you ever look at building, I don't know, a micro LLM based on, all the data that you have in the system in the last, say, 16 years?
So first is,
Because you power literally every big bank in the country.
but fortunately, we don't store any data. Very important to clarify that point. While everybody thinks that I have lots of data, no, I don't. I forget it as soon as I process. And I don't want to be on the wrong side of the law ever. So the biggest thing is I cannot do anything with that. A lot of things that we learn is immediately on the run, right? And I think that has to be strictly followed. Can we create? Maybe, but I mean, it is too, again, early to comment on that how soon, what are the things, because things that we are working on are largely on the fraud and governance models using this data. And we have seen some early bit of success. This continues.
Detecting fraud.
Yes. But yes, a lot of prompting has to happen. It doesn't just show like that. But yes, a lot of advancement has taken place on that. And some of it is there in our stall down there. We are happy to say that we are nearing zero. I think we are trying to build an era where it will be zero fraud, zero friction kind of situation.
Right. From a 2-year, 3-year perspective, Sabyasachi, what is the next engine of growth going to be for Perfios? You've kind of outlined banking, insurance, embedded commerce. You also have a business, working on this identity verification, fraud detection. What's going to be the biggest engine of growth for you?
Pointing out one is difficult, but let me try. The first is the international expansion, which we continue to strengthen. We are already present in 18. We'll not limit to 18, probably we'll go beyond that, but we'll also strengthen wherever we are present. We feel significantly it will contribute to our top and bottom line, both ways. Second, we are creating products which will help the financial institution to comply to the new rules and regulations that keep coming, which was not used to come at so frequent interval that we have seen in last 1.5 years. So how do we help automate them to meet the compliance requirement? That's the second bit of area. And the third biggest thing that I have already spoken is the fraud and compliance. That's a big investment that we continue to do. We have reached a state, but I will not be happy unless we get to zero. So let's hope that we get there soon. So that's a large, I think, not just from a revenue perspective, but to make a difference to the industry, I think that's important.
Right. To founders or startups that are looking to raise funds, you have the distinction of turning unicorn in a year, where we've had just 4 unicorns, right? What can you tell us about raising capital during bullish and bearish markets? Because you also told me during the course of the conversation that we were not obsessed with valuation. You took your time in building out the product, scaling it.
16 years of perseverance. So if that tells anything, today everybody who starts the company, they need to raise fund in the first year of run. I always advise, if you raise any kind of money, it's an additional responsibility. So please think twice. Second, it shouldn't take away your independence of creating a product or building an innovation engine which will produce next line of products, because you will focus yourself on EBITDA and top line and bottom line. So stay very clear on that. Are you there as a product that you can chase that? How we have done, and I feel, which is no rocket science, fundamentals to be strong, always. We always believed in frugality. I mean, that's the topmost priority. The frugality doesn't, there is a distinction between frugality and lavishness. So the investment and the research has always been a top priority. But investment on discrete spends? No, probably no. To be absolutely transparent, because when you are in a bearish market, what they expect is transparency. Whatever are the challenges that you face as a company, you need to call it out instead of hiding them. Because if they find it from some other source, they don't like it. So they will not invest in your company. So you need to be transparent. Third, and most important, are you focused on profitability? Are you even, I hear this word, path to profitability. What is the timeline? Path to profitability is 10 years, 2 years, 1 year, what is it?
What should it be?
Ideally, less than 2 years. If a product is not able to break even in less than 2 years, I'm not very sure. Then it is a nice, because see, it's a dilemma. Anybody who creates the product is obsessed that I have created the best. Customers are not willing to pay. You might have created the best, the time is not right. If you want to run it, your choice, if you have enough money. Investors will not pay for it. Gone are those days.
They are placing a premium on profitability.
Absolutely.
Right. It's also been a very good year for tech IPOs. I mean, we've had, 6 listings in the last 2 months. They've done well. And you have also, strengthened your leadership team. I think you got a CFO last week from a fairly large IT company. What are your plans as far as hitting Dalal Street is concerned? Have you already started preparing the ground?
Okay, I can't avoid this question everywhere I get asked about this. I wish I can have
We are in Bombay, so I have to ask you about Dalal Street.
We are very close to the capital guys as well. But anyways, I think, see, it is a journey. It's an inevitable path, right? Finally.
So path, how many years? Like your previous?
Yeah, so I know. So probably less than 2 years, probably.
So 2026.
I can't say that. The reason is, I don't want to do it again for the valuation sake. What is the need of doing an IPO? Okay. Is it that I have some plans which I need the currency for? Is it something that we feel that we want to do enough research that we need the currency for? Is the market ready and that's why we should do it? No, the market is ready today, tomorrow it is not going to be there. Again, day after it is going to be ready. So market is always like that. But I feel, we will always be ready to go to the market when we feel the need is truly there for the company to do something with that. Otherwise, why should I just do it for the sake of doing it? That's our core belief, but it's a journey. It will happen eventually. Strict timeline, difficult to put on pen to paper, but we are always ready. You're right that we have been strengthening the leadership, and that's not only for IPO. But as I said, India teaches you scale and robustness. So India teaches you how to handle governance and compliance. Yes, you need to strengthen the leadership, and it is not just leadership, of course. You guys pick up only the leadership news. The changes is across, right? So it is the strengthening of the entire Perfios from a people, culture, governance, and process that's happening, irrespective of IPO or no IPO. The reason we have to be 100% compliant, we have to build an organization which is generating profits. We have to build an organization which is going to create more and more innovative, disruptive products, which actually is going to solve the pain points instead of just a feature enhancement. I hate that. Feature enhancement, anybody can do. And people say, that's an innovation. Sorry, that's not an innovation unless we are truly solving a pain point. This is a message to my internal team. Every time I talk to them, don't come with a feature enhancement and say, sir, I have created an innovative product. What are you trying to solve? So I think this is why the change that you see in the leadership has nothing to do with hitting the market or not. Yes, it will help us, right?
Right. GFF 2023, we are here. By GFF 2024, what do you think will be the 1 or 2 big, shifts, changes, however you want to define it, in the financial technology space, financial services and technology space? If there is a GFF 2025, what will be the predominant theme then, apart from AI, which I think will continue?
Governance and compliance.
Okay, great. On that note, I think we have about 20 seconds. If anyone has any questions, maybe we can take a couple. Okay, or we can take it on the sideline. On that note, thank you very much,
Thank you,
Sabya. Very
Chandra,
good
for having me.
Thank you so much.